to learn a lot from you today. We have people joining in and we have more people about to join us in. Mr. Joseph, you are welcome. Can you hear me clearly?
I can hear you fine, yeah.
Excellent. Okay, so welcome once again to the viewers. I believe we have viewers from all around Africa, some places in Asia and the UK. Thank you for joining us. We're excited to learn from you, Mr. AGGREGATORS. But before we get into the presentation, Mr. AGGREGATORS, you could go ahead and just introduce yourself and let us know a little bit more about yourself, and then we'll start the program from there.
Thanks a lot. Welcome everybody. My name is AGGREGATORS Mukherjee. So I'm the Managing Director of Risk Shield. We're a firm, we're based out of Zambia, but we're working a lot in both within Zambia as well as regionally in different parts of Africa, as well as in Asia, Australasia, Europe as well. So yeah, we're very excited to present some of the products which we've been doing over the years, some of the experiences we've had with these different products, and particularly why would these products be relevant for agribusinesses and banks and financial institutions as well. Yeah.
Okay, thank you so much. Mr. Joseph, could you kindly also introduce yourself and tell the attendees who you are and just a little bit more about yourself?
Morning, everybody. Yeah, so my name is Joseph Kakweza, and I'm the head of operations at Risk Shield. So I do a lot of support in terms of operations with the offering of insurance, especially for the small-scale farmers in the mass market.
Okay, it's glad to meet both of you. I'm sure the attendees now know who exactly would be presenting to them this morning. So without wasting any more of your time, so today we're here to learn about the innovative agriculture insurance products and how they can help farmers and businesses with climate risk. So Mr. AGGREGATORS, you can take it up from here. Thank you so much.
Thanks a lot. We want to basically have a short presentation on some of the different product options in the agriculture insurance space. So I think the way we can do this is I'll present for a while, and then I will hand over to my colleague Joseph as well to share some of the case studies. So we can move on to the next slide, please. Yeah, thanks a lot. So yeah, so that's just to give a quick profile of Risk Shield as a company and what we do. So essentially, we are a service provider. We are a consultancy firm as well as a technical service provider, and we've been developing and delivering different types of inclusive insurance products, agriculture insurance products, and generally products for the mass market in a number of countries. So we've actually worked in excess of 30 countries by now. In fact, the products that we've developed and helped in the implementation of over the years have insured over 4 million farmers as well in these countries cumulatively. And we also work very closely, of course, with insurance companies and reinsurance companies, because we're not an insurance company ourselves, but what we do is we partner with different insurance companies and reinsurers for transferring the risk. So I believe some of the participants today are also from various insurance companies around the world, with some of whom we have already worked with in the past. And those are the main areas in terms of the actuarial expertise, the technical support for product implementation. We also do a lot of work on research, feasibility studies, capacity building trainings, and also operational work, which is one of the key areas or the key challenges that comes up with any kind of agriculture business, as we know. So moving on to the next slide, please. So if we move to the next slide, please. Yeah. Okay. So basically, in terms of, okay, thanks a lot. So basically, yeah, so that's just giving a quick overview of the countries where we have been most active in the last 5 years. So as you can see, although we are based out of Zambia, we've been doing a lot of work within Zambia and in the region in Southern Africa, also some work in East Africa. And in more recent years, we've also been quite active in West Africa as well. As well as many parts of Asia. We've also done some work in Europe, in the Balkans, and most recently some work in PNG as well in Australasia. So moving on to the next slide, please. So in terms of the key types of products that we've been doing, yeah, so if we can move on to the next slide. Thanks a lot. Yeah. Okay, so maybe just I wanted to give a little bit more of an overview about the team. So because I know often, yeah, kind of, it might be a bit surprising that we're working in so many different countries. So if we look at the team composition, thanks a lot. Yeah. So the way we work is it's a fairly small operation. We're basically based out of Zambia, and I'm myself. I'm a fully qualified actuary from the UK. So I support in terms of the product design and pricing and so on. At the same time, we work a lot with different types of professionals. So we work with agronomists, with other insurance professionals, agribusinesses, banking professionals as well. And then we work in association with other types of with other organizations. So of course, we partner a lot with insurance companies. There's a few examples of the types of insurance companies we have worked with over the years. We also work very extensively with international reinsurance companies. Some examples of companies that of reinsurance companies are given there. And also with, of course, with different types of financial institutions and agribusinesses as well. So moving on to the next slide, please. Yeah, in terms of the products, thanks a lot. So in terms of the products, the main product categories fall under, sorry, just the previous slide, yeah. So the main product categories fall under index insurance products, as well as some indemnity insurance, as well as hybrid options as well. So basically the point being that when, because our focus is very much on products which are suitable for small-scale farming as well, because as we know, the majority of farmers in Africa and Asia are all small-scale farmers, and the typical insurance products don't really meet their requirements because they need a lot of data. They need quite extensive claim settlement processes, which can be quite expensive and difficult to do. It needs underwriting. So that is where we come in. Some of the products we have done over the years, one category is weather index. So we've done a lot of weather index products over the years. And these products have been based on satellite data. I'll talk a little bit more about that in the following slides. And the types of risks which are being insured here are basically the catastrophic weather-related risks. So risks like drought, dry spells, excessive rainfall, flooding, fluctuations of temperature, of humidity, of soil moisture, all of those types of risks can be insured. So the biggest factor is about the availability of the data and whether the data is accurate or not for the farmers who are being insured. But this is where we work with multiple sources of satellite data. So each country in Africa, including Zambia, we have 4 or 5 sources of satellite data which we can use on a needs basis. And so as a result, the monitoring of the risk can be done automatically. And this, as you can imagine, this makes it practical to implement these schemes for thousands or even hundreds of thousands of farmers because of the automation in the process. We've also done yield index in some countries. We've done a lot of yield index work in countries like Rwanda, in Zambia, Nigeria, and others. So yield index is something we can also do. However, we are very selective about where we do this because we would want to implement best practice. So we don't want to do yield index everywhere. It's only where there are sufficient years of historical data available, typically at least 5 to 10 years, which allows us to do yield index as well. I will talk about both of these products quite briefly in the next few slides. But apart from that, we also have some indemnity products, which are combinations of different indices or also combinations of weather index and indemnity as well. We've also done life and health insurance, particularly where that has been a part of the agriculture value chain. So, for example, in a country like Malawi, we've got, I think, by far the cheapest, the best value funeral insurance product in Malawi currently, which one of the insurance companies involved there is also might be participating on this call, and that's covering about 150,000 farmers over 2 years. Yeah, and there's also livestock insurance products we can offer, as well as digital-based insurance products as well. So moving on to the next slide, please, where we give some details about how exactly these index structures work. Yeah. So with weather index, basically the main risks being insured are weather-related risks. So these are risks which are weather-related and which are also expected to affect a large number of farmers at the same time. So these are typically risks like drought, flooding, maybe very excessive rainfall, temperature fluctuations. We've done this based on satellite technology. We've done it based on radar in some cases. We've also done this based on weather stations and rainfall gauges. It all depends on what data sources are available, what can be used, what is allowed in the country as per the regulations and so on. But yeah, essentially what we see is, for example, both in Zambia as well as other countries in Africa, satellite option is still a very feasible option for doing index insurance, because we can't really use rain gauges and weather stations given the lack of data and given how far farmers are from these devices. But satellite coverage is there throughout the continent, really. What is important, of course, is to test and validate the data and to ensure the data is working accurately. So this is where a lot of the operational work we do in terms of ground truthing, carrying out surveys, carrying out focus groups with farmers is really important for doing this kind of validation. And then essentially the products work automatically. So as you can see in that in the image 4 on the bottom row, with this product, once the trigger levels are defined, which would be linked to the normal levels of rainfall, and bear in mind we're looking at the distribution of the rainfall here, not the total rainfall over the whole season. So as soon as the products trigger a payout, automatically there would be a payout. There would be no need for farmers to submit claims or for insurance companies to send a loss assessor hundreds of kilometers to go and verify a small field somewhere. There's no need for any of that. It's purely automatic based on remote sensing. The other thing to point out is, of course, these products are almost always nowadays done in collaboration with other parties. So we need the partnerships with agribusinesses, with banks, with MFIs, so that when there is a payout, the payout can also be linked to outstanding loans, or it can be linked to farming inputs and so on. So as a result, the products become the insurance products which farmers are benefiting from, but at the same time, it also reduces the risks in the agriculture value chain, which makes it interesting business prospect for agribusinesses. So moving on to the next slide, please, which is on yield index. Now, yield index is again a very interesting category of index insurance, whereby so it's still an index insurance product. Sorry, if you can move to the next slide, please. Yeah, so it's still an index insurance product, but it's the index is actually based on the average yield in the area. So sorry, I'm not sure if the sorry, Joanna, is it possible to move to the next slide? Sorry, yeah. Okay, thanks a lot. Yeah. So this is still an index insurance product, but here the index is based on the average yield in the area. So the point being that, yeah, so it's still very much a parametric product. It's not based on individual farmers' loss experience. But what is done is an assessment is done of the yield in a particular area. So it could be at the village level, it could be at the local government area level, the agriculture camp level and so on. It needs to be a granular area so that it's representative of what the farmers are actually experiencing. And then once that is done, again, it's similar to weather index that a trigger level is defined, which is, which would be much below the normal yield for that particular crop and for those particular farmers. And if the actual yield is below the trigger level, then automatically that would trigger payouts. So moving on to the next slide, please, which is the last category of products I wanted to talk about today, which is livestock insurance. Thanks. So livestock as well, we've done some work on this in a few countries, in Nigeria and Bangladesh, in Zambia as well, in Ghana. And with livestock insurance, there are different types of products. We have products which, where the cattle dies, for example, there would be compensation. Of course, in that case, there's also a need to ensure the cattle is, monitored accurately, to ensure they're following proper veterinary care, a good vaccination schedule, and so on. And then at the same time, so it is possible to do this if the farmers are quite well organized, or if we're talking about medium scale to large scale farmers. But otherwise, for small scale farmers, again, it's difficult to have on a purely indemnity basis. However, there are some products which can be done, although this needs a little bit of research, but it's possible if the locations where livestock are grazing are known and the actual risk exposure for the livestock is known, then it's possible to have satellite-based products. So this is there's been a lot of experience in this sector over the years where you have satellite-based vegetation index products where depending on the amount of pasture available on the ground, there can automatically be a compensation. So that's another category of products which can also be done, although it is a little bit more trickier compared to the crop index products. And then finally, so moving on to the next slide, please. So for all these product categories, of course, a big challenge with any kind of insurance product, and particularly if you're talking about small-scale farmers, is reaching a large number of farmers. So this is where it is very interesting to look at what partnerships can be done with different types of businesses. So one of the models that we have worked with over the last 7 years now is integrating insurance in the contract farming model or in outgrower schemes. So I know in this virtual agriculture summit, there are many agribusinesses and contract farming companies who are also attending, and it's very exciting to have them on board. So for these businesses, when you are giving out inputs to the farmers or finance to the farmers, there is of course a risk exposure that the farmers may not be able to repay for various reasons. Some of the reasons are also weather related, for example, or to do with agricultural risks. So basically the way the model works is when the inputs or credit is being given, farmers can automatically be insured. This can either happen on a mandatory or bundled basis, or indeed it can even happen on a voluntary basis. So Joseph will take us through one of the some of the experiences where we've had with both of these options. But essentially, once that is done, the value proposition for the agribusiness is that they're actually able to use insurance as a kind of incentive for loyalty-based contract farming. So it's something to basically use as an incentive. So the farmers actually partner with the contract farming company. Maybe they grow more of that particular crop. And indeed, they have an incentive to reduce side selling because the insurance might be contingent on them not side selling. Yeah. So as a result, this can be a protection for both the farmers, of course, because it's protecting the weather risks which affect their farming. At the same time, there can be a business case for the contract farming companies as well. So I would ask Joseph to take us through some of the case studies we have had on this and other agribusinesses. Over to you, Joseph.
Thank you, Agritosh.
Sorry, thank you, Mr. Agritosh. Maybe Mr. Joseph, before you go ahead, I see you already have some questions coming in, which you're answering, which we'll ask towards the end of the program. But if anybody is here, please send in your questions right away. If you've got any questions, just lend us from a short presentation. But please do send through your questions. Mr. Joseph, over to you.
Thank you. The next slide, please. Yeah, so in Zambia, as AGGREGATORS is mentioned, we have worked with the different aggregators, but one of the most successful distribution channels we have worked with is the cotton outgrower scheme, where we've worked with a couple of outgrower schemes. So where the kind of product that we've offered to those aggregators has been weather index insurance, as well as funeral insurance for the farmers growing cotton for those outgrower schemes. Then, of course, the crop that has been insured is cotton. So the way this worked was that farmers would receive inputs from the outgrower scheme and then deliver cotton at the end of the season. So typically, what is insured is the cost of inputs given to the farmers. And in this case, is the value insured per hectare. So per hectare, the value insured is 250 kwacha. That's the value of the inputs insured per hectare. But in addition to insuring the inputs or the cost of production, the farmer taking the contract with the outgrower scheme would also have his life insured, such that in the event of the farmer passing on, then the family members would receive a cash benefit of 1,000 kwacha to cover some of the funeral expenses. So in terms of locations, this insurance product would cover locations almost throughout the country, throughout Zambia, but would use the sheds as a reference point to monitor the weather for the farmers around that shed. The basis for the cover, of course, the satellite estimation of rainfall based on cold cloud duration. In short period, this product was looking at the entire season. So for Zambia, the rainy season covered with starting from the 1st of December up to 31st of March of the following year. Then typically the risks which have been covered by this product is of course drought and excessive rainfall. So drought of course would look at the early dry spells, the late dry spell, and excessive rainfall. So in addition to the weather index insurance, the death of the farmer also would be covered by the funeral cover. So payouts could typically occur for both for the three risks: the early dry spell, late dry spell, and excessive rainfall. So the total payout will be the sum of the three periods. Then this was fairly a very cheap product. The premium to cover both the weather index product and the funeral product is about 30 kwacha to cover both the two products. Next slide. So typically the product, as I said, it was a weather index insurance product covering drought and excessive rainfall, plus also life insurance for the farmer taking the contract with the outgrower scheme. Weather index insurance would cover the inputs given to the farmer. Then the premium, most farmers would know they may not have their cash upfront at the beginning of the season. So in that case, the contractor would pre-finance the premium. So this basically led to higher take-up of insurance. There were no subsidies involved. Farmers would then pay the premium at the end of the season when they harvest and deliver the crop to the outgrower scheme. So for the period between 2013 and 2020, we've seen over 120,000 farmers being insured. And as an example, in 2015, 2016, there were about 52,000 farmers covered under the product, and there was quite a high payout. 27,610 farmers received a payout during that season. So what we see as the potential benefit of such kind of a product, potentially this kind of product can help in terms of loan recoveries, higher loan recoveries, and also deliveries. In fact, we have a real case in Malawi as well, where we saw that for the company that had insurance, it experienced higher loan recoveries compared to other companies which had no insurance. Because ordinarily, in a bad year, farmers may be reluctant to deliver the product to the company, because they'll be trying to avoid the payouts. But when it's insurance, farmers are more willing to deliver the crop to the company. And essentially, this helps in terms of lowering side selling. So we have seen multiple companies, GNAs adopting the product, and this has helped in terms of reducing the credit risks. And also these companies, they've used the insurance as an incentive, for farmers to grow cotton with them. So what kind of service have we seen from the company itself? So the company helps in terms of pre-financing. So this is our scheme company, pre-financing the premium, also enrolling the farmers, doing awareness raising, promoting the product, and of course, reflecting the payouts to the farmers. Next slide. Next slide, Joanna. So the other model, in addition to the contract farming operation that AGGREGATORS has spoken about, is also the farm input linkage. So under the farm input linkage, here we see input companies, input suppliers, inputs for either seed, fertilizer, chemicals. This is where farmers, when they go to buy the inputs come bundled with insurance. So in the event of bad weather, then the insurance company pays the farmers, and farmers get payment in the form of vouchers which they can use to then go back again to the agro dealer and they buy seeds at a discount. So we have had this kind of model, the case study in Zambia. Next slide, please. Where one of the companies sold their seeds bundled with insurance. This was in the 2014-2015 season, where 400 farmers bought seeds for maize in 2 districts, in Mumbo and in Pongwe. So these seeds would come bundled with insurance. So because that year was a bad year, we saw farmers benefiting out of this insurance payout, which occurred due to the late dry spells in February and March. So what we've seen from this input linked insurance cover is that payouts can be used to finance a discount where the farmer goes back to the agro dealer and buys the additional seed using the voucher that he gets as a discount from the payout of the insurance. This also model demonstrates that whether this insurance could be used, could be linked to inputs in Zambia, and can also be offered through retail shops. And again, with this insurance, there's scope for tracking farmers based on the agro dealers' location in the different districts. So over to you, AGGREGATORS.
Yeah, thanks a lot. So if we can move on to the next slide, please. Yeah, I mean, in addition to the agribusiness, some of the case studies with agribusinesses that Joseph described, another very important types of institutions with, where insurance has been integrated is, of course, the banks and the different types of financial institutions. So essentially, in this model, as you can see, like if when a bank or let's say a bank, for example, when they give out a loan to the farmers, insurance can also be integrated with that particular loan. Sorry. So as a result, the farmer would automatically have insurance coverage for specific perils. Um, yeah. So with this, in this model, you have the actual insurance premium can actually be pre-financed by the bank. So in other words, the bank or MFI actually pays the premium and adds it on top of the loan. But there are some other options. It could also be adjusted on the deposit that is paid. It could also be adjusted in the repayment that the farmers make, and so on. To look at this model in a little bit more detail and also to give some case studies, so if we can move on to the next slide, please. Now, of course, with this can be done for all of the previous types of products we were looking at. So for weather index, yield index, indemnity, hybrid options, for all of them, this integration can be done. However, we must, it's important to recognize the pros and cons of doing this for both entities, for both the financial institutions as well as the farmers. So when it comes to the banks and MFIs, adding insurance into the loan, there are some challenges. If you look at the, if we look at the advantages first, this is reducing their risk to some extent because it is reducing the production risk to some extent. So that would have an effect on their credit risk. And as a result of this, it can actually enable more loan disbursals in the first place. It can also enable banks and other financial institutions to offer specific tailor-made crop loan products in the first place. So for example, we've been working with an MFI in Zambia over the years, where although they have a very strong rural outreach, but they would avoid having a very specific crop loan product in the past. But in more recent years, because this insurance product was available, they were able to return to that market and offer a seasonal crop loan product. So as a result, the farmers actually got access to that finance, which previously wasn't even there. So that's an advantage for the bank as well. So it enables them to enter new sectors. On the downside, of course, there are quite a few challenges. One, of course, being that the perceived cost of lending might become much higher, because if the insurance premium is purely seen as an additional cost, then of course it will make the loans more expensive. Of course, the reality is that it's not just an additional cost on its own, but it's a separate product. So it should be treated in the same way, even from a regulatory perspective. But anyway, that's another discussion. But some other challenges is that as a result of the loan perceived to be more expensive, in that case, there could be, the farmers may not want to pay for this additional for the insurance, or they might perceive the loan terms to be more expensive. And then there are also some regulatory restrictions, in some countries. Like I see some of participants from Bangladesh, for example, where the central bank was quite, they didn't want insurance to be added into certain types of loans. But then, of course, there are many advantages for the farmers. From the farmers' perspective, some advantages is that they can actually access specific loan categories, such as single balloon repayment loans, which previously may not be available, maybe specific livestock loans, which otherwise may not be, it will be riskier to give those loans without insurance. And at the same time, it can also potentially reduce or complement their collateral requirements. So we've seen some interesting experiences again, in the context of Zambia, for example, where farmer organizations, such as some of the DFAs in Central Province and Mumbwa, for example, have actually used insurance as a form of collateral in order to access finance in the first place, also to access fertilizers. They've used it as an alternative collateral. We've also seen cases where, of course, there's the direct benefit of having insurance, that it's a form of livelihood protection as well, obviously. But then on the downsides, there are some challenges that the farmers may not be fully aware about how this product works. So as a result, if they're not aware of it, they may not value the product because they're not aware of it. then it also increases the cost of credit itself, especially if there's no reduction in the risk premium that's in the interest rates. So that can make the loans more expensive. And then also the fact that typically these products would only be covering the loan amounts. They may not even cover the full cost of production or the expected revenue. So those are some of the pros and cons for both parties. So if we move on to the next slide, please, which is just to show some of the case studies of integration with loans. Of course, there have been many examples of this happening, but here's a few case studies from Zambia, from Rwanda, Tanzania, where both banks as well as farmer organizations have used agriculture insurance, different types of agriculture insurance products, to basically either use as a form of collateral or use to be able to offer specific crop loan products in the first place. So a key role that that the financial institutions play here is that, well, essentially they're playing a key role with the distribution of the insurance product. They are also effectively bundling insurance and credit. They are also providing some data for insurance underwriting perspective. And very importantly, they would be playing a role on the pre-financing of the product as well, in terms of pre-financing insurance premiums. And of course, in potentially negotiating with insurance companies on the product design and the pricing. So for playing these different roles, what is the business case, or what should be, why should a bank or even agribusinesses really, consider these agri insurance products? So if you move on to the next slide, please, which is summary of the potential impact of these insurance products on different types of stakeholders. So as you can see with the first category, that is the banks and MFIs, having insurance would essentially, it would reduce the credit risk to some extent. It can also enable a better relationship with the farmers. It can also enable a more risk-based business strategy, and overall reducing portfolio risk as well. At the same time, also enabling the financial institutions to enter or to offer insurance, to offer loans in certain markets or certain types of loans, which otherwise might be too risky to offer in the first place. And then, of course, for the agri-businesses, there's a number of benefits, potentially using insurance as a form of sales promotion to improve farmer loyalty, reduce side selling, potentially improve take-up of inputs, and so on. And so that's a few examples I've given in the second column of some of the companies we have worked with, just focusing on Zambia for the purpose of this conference. But of course, we've also worked with many other types of companies in other countries as well. Okay, and then finally, moving on to the last main slide. So we wanted to also talk a little bit about how these products can be integrated with government schemes. So, so far we've been focusing more on the role of the private sector, which is, of course, extremely important. But at the same time, government also has a very important role to play. So for a few years, we were involved in what's probably the single largest crop insurance scheme in Africa, which is in Zambia again, which are linked to the Farm Input Support Program, whereby for farmers receiving input subsidies, they would automatically also have insurance coverage based on, well, different parameters. So there's a weather index product. Now there's also a hybrid option of weather index and yield index. But essentially the way these products work is it's linked to the input subsidies that the government is giving. So the government is giving input subsidies to farmers through different channels using e-vouchers or mobile codes. And the agro dealers are also involved in this. There's about 1,200 of them who are registered to give these inputs on FISIP. And with this scheme, so it's been a fairly large scheme. So over 2 years, for example, about 2 million farmers were insured. And one of the key takeaways we got from this in terms of the role that the government can play here is, of course, in the raising awareness about insurance and facilitating the premium financing of for this kind of product, and also in they play a very key role in providing the infrastructure that is required for the payouts to actually reach the farmers, which has sometimes been a challenge because of various operational problems. So moving on to the final slides, please. Yeah, if you can move on to the next slide, please. Yeah. Some of the services, yeah. So essentially, with some of the things that we can offer to different insurance companies, as well as other types of businesses, banks, agribusinesses, and others as well, is that we can play a key role in actuarial valuation, in the microinsurance product design and pricing. We can do a lot of work on capacity building of both from the insurance side as well as of other stakeholders. Then, of course, on the regulatory processes, we can support both the regulator itself as well as the private sector. We also support on the reinsurance side in terms of transferring the risk to the international reinsurance markets. We also do a lot of work operationally, so things like marketing materials. If we go to the next points, please, the training of operational and field staff, supporting insurers with marketing materials, and also to explain to potential aggregators and, whenever possible, even to the farmers about the payouts and how exactly the products are working. And also to support on operational modalities, particularly the use of digital financial services and the use of tech for delivering some of these products. And finally, on developing publicity materials as well. And then moving on to the very last slide we have, there is, yeah, so if you go next, please, yeah. So apart from the insurance perspective, I know there's a number of agribusinesses, farmers, and financial institutions attending the summit as well. So having heard all this, if you're interested in seeing whether tailor-made insurance products can be suitable for your business and for the farmers that you're working with, the essential data items we need is to know the locations of the farmers. So these can be GPS coordinates. These do not have to be coordinates of individual farmers, because we appreciate that is not possible to obtain all the time. So, but they can be reference points. They can be GPS coordinates of reference points which are close to farmers. So maybe 5-10 kilometers away from farmers. Or they can even be the names of locations, which we can then use to extract using our GIS software. And this is important because we need to know the locations in order to extract the appropriate satellite data in order to develop and price the products, and for monitoring of the claims as well. Also to know the crops, the duration of the crop cycle, and ideally the planting dates as well. So those are the key information, the most essential information we need. Then anything above that you can provide will be very useful for having, for fine-tuning the products further. But if you don't have this information, then we can also use other existing information that we already have. So knowing what are the key risks involved, if you have crop production data, that's very useful for both weather index as well as yield index products as well. Knowing the number of farmers and hectareage to be insured, cost of production, and any experiences of specific years when crop losses occurred or when bad weather conditions occurred. So those are the important data requirements we have for developing the products. But as I say, the ones in red are really the essential ones. The others are good to have, but not essential. So please do contact us if you are interested about any of these products or any other associated services. Our contact details are there. And I don't know whether we still have some time for questions. So back to you, Joanna.
We just have a bit, but maybe we could answer just a few questions. I've seen we have some questions which you've already answered. I don't know, Ms. Aggretosh, is there just one question out of these questions that you'd like to highlight before we come to an end? But like Mr. Aggretosh mentioned, everybody who's registered on this platform will receive the slideshow and his contact information. So if we may not address your question right now, I'll send you his contacts. You can always call him directly. Mr. Aggretosh? Any questions that you want to highlight from the questions asked?
Yeah. So so I can see there's one question, I think from one of the insurers in Zambia about the distribution channels. Yeah. So, I mean, basically, I think the ones which we see as very effective are, of course, there are the banks, MFIs, and others, as you mentioned in the question. But in addition, I think some of the agribusinesses can also be very high potential. So, for example, contract farming companies, outgrower schemes, these can also be very, interesting distribution channels. But I mean, effectively, any kind of company or aggregator which is also exposed to these production risks, or let's say the weather risks, or even other non-weather related production risks, they would be suitable companies to partner with. So in that way, we see the contract farming companies are very useful partners to have as well. Yeah.
Okay, thank you so much, Mr. AGGREGATORS. It's been a very informative meeting. Thank you so much for the presentation. Thank you so much to every single person that joined us this morning. Please make sure you stay tuned to Meet the Farmers Virtual Summit. We did have a 3-day conference that just ended yesterday, but we'll make sure to keep bringing you more presentations such as this. I hope you've enjoyed this session and have a wonderful day. But Ms. AGGREGATORS, any last remarks before we finally close the meeting?
No, I think that's everything from our side. I mean, I think there was another question about the slides. I mean, yeah, we can certainly share the presentation with everyone who's attended. That's not a problem. And please do let us know if you're interested from what you hear. Maybe just one last comment that sometimes so as you can see, these products are fairly complicated, so it also takes some time to actually develop them properly. So I think it's good if if you can give us notice of at least a few weeks for between when you want to buy, when you want the products to be available, then that will be really useful. So yeah.
Okay, thank you so much, Mr. AGGREGATORS. Thank you so much, Mr. Joseph. Have a wonderful Friday, and please make sure you stay tuned and stay informative. We will be presenting you more meetings such as this. So goodbye.
All right.